and welcome to Hard Copy, coming to you from our studios in Abuja. I'm Maokpe Ogun Yusuf. Tonight, we speak to the governor of the Central Bank of Nigeria, Godwin Emefiele, on a number of issues. They range from the policy thrust of the central bank to inflation figures, which seem to be on the rise, border closure, and monetary policy, which is the CBN's core mandate, are also our business tonight as well. Well, I'm no business guru and I make no pretenses to it. So if you're just like me, wondering what the CBN is doing about the economy or what its role should be and what its role has been, then this conversation is for you. And I hope you send us your heartfelt impression after the show. Mr. Emefiele, who only just got reappointed for a new 5-year tenure, says one of his primary aims is to run a people-focused central bank. Now, what does that mean? I began this conversation by asking him what he intends to change about his strategy this time, considering that there were challenges with achieving some of the set objectives in his first tenure.
When I first assumed this seat as the governor of the Central Bank of Nigeria, I came up and said, listen, that we would, when we say it should be a people-focused central bank, we're saying that yes, in as much as the primary mandate of the Central Bank of Nigeria is price and monetary stability, as long as the Central Bank of Nigeria is that monetary policy arm of government that provides monetary policies that would help the economy, that we would like Central Bank of Nigeria not just to be a Central Bank of Nigeria that makes monetary policies for the economy, but I would like to see or put in place policies that will really directly impact and positively on the lives of our people. If, for instance, we say, okay, yes, interest rates, yeah, you want to look at putting in place policies that will keep interest rates low, which is what people want. They want good exchange rate, they want growth, they want employment and the rest of them. What policies are you going to put in place to make sure that these things or these objectives that you seek to achieve directly impact on the lives of our people? Now, I was very quick in admitting, like you said, that during the first term, not all these objectives were actually achieved. But I must say, I should be quick to say that some were achieved. Stable exchange rate were achieved. Trying to make sure that we put in place policies that will directly impact on the lives of our people, we achieved to a reasonable extent, but may not have achieved everything, because whether we like it or not, the level of unemployment today is not what we are all happy about. Growth has not been as good as we thought it should be. Growth as 2% and sub-population growth rate certainly is not the kind of growth rate that is good for Nigeria. Nigeria has always been a country with average growth rate of about between 5 to 6 and in some cases about 6.6% sometime in 2013 or 2012 or something like that. But you see, the point is that but I think it's also important to say that during those periods when growth was as high as 5, 6, it's important for us to dimension why they were that high. If you look at that period, right, we found that crude prices, particularly between 2009-10 into about 13-14, averaged at least $110 per barrel. In 2008, precisely, our reserves was, sometime in August, reserves was as high as 62 billion. Okay? And so you find is where if your crude price is good, your production, I would say fairly good, and inflation also at the targeted band of between 6 and 9%, naturally, with high reserves, and the fact that crude prices are positive, so you find it where there's a lot of economic activity that translates in that growth level of 5 or 6% that you saw during those periods. Now, looking at that on the other side, you need to be able to look at it that between 2015 and now, what has been the average crude price? Average crude price has been at best, in fact, throughout the average for 2018 was put at about $71 per barrel. In 2019, we are not going to be optimistic to have it as high as that. If we are lucky and we find average crude price for 2019 at about 65, we'll be very, very lucky. And we are not that optimistic. I must be very frank that in 2020, perhaps if we are lucky again, we'll sit at about 60 or maybe slightly higher than that. So the era of high crude prices is gone. Reserves, as a result of the global crisis that we saw, translating also global crisis, geopolitical tensions, issues bordering on geopolitical tensions, issues of bordering on trade tensions between Iran and the US. Those issues are there. I mean China and US in this case. Those issues are there. All these themselves have had impact on the economic activity, and that is the reason growth has not been as good as it is. But it's not an excuse. We are also saying that a lot of work needs to be done. And it will come from how do we create jobs? What do we do to create jobs? What do we do to get our industries back to life again? I have had cause to even send some clips of certain things to you. Nigeria at a time, right? Our industries were really bubbling, they were alive. The textile industry used to be the largest employer of labor after the public sector in the 50s, 60s, even up to the 90s. Okay? Nigeria used to be the largest producer and exporter of palm oil in Nigeria. Today we're an importer. Our textile industries are all dead today, and we're thinking of what can we do to resuscitate them. If we're able to put in place policies and indeed follow through on those policies that will help to create jobs for our people, get these industries back to life again, naturally they will, not only that demand will be accelerated, output will be accelerated, industrial productivity will also be accelerated. So this will translate not only into higher jobs, but also it will translate into higher growth numbers for the country.
Let me take you up on monetary policy, because one of the areas where people talk about getting monies to the real sector is, the MPC. They talk about the fact that the current rate from the CBN is too high, and so the real sector is not able to access or to use those the monies for sustainable business, so to speak. It is not sustainable to loan money from the banks. And one of the criticisms that has followed that is that we have not been able to take the bitter pill of cutting interest rates and sustaining the effect of that for a sustained period. And that's one of the reasons why our economy, our real sector, is not growing.
Well, in as much as, yes, I will admit that low interest rate is necessary so people can borrow at low interest and then boost production and output, I will not agree that it is totally all about interest rates. However, I would also agree that, yes, interest rates have been high, because I would say that in the agricultural sector and manufacturing sectors, most of them would tell you that they cannot borrow at any rate higher than single digit. And what the central bank has been doing is to put in place policies that will make this possible. You will say that our monetary policy rate is high, and that for quite a considerable length of time, we've managed to keep the monetary policy rate at a stable level, say at 14%. But what you would have observed recently is that as a result of certain what are called structural inefficiencies in the interest rate structure in Nigeria, that certain actions are now being taken by the central bank, have been taken by the Central Bank of Nigeria, that are now resulting in a downward movement in interest rates. For instance, when the Monetary Policy Committee held its meeting in May, we looked at what is the size of the industry loans. Okay, monetary policy was not comfortable that industry loans were dropping. At best, it had just plateaued. And that we believed also that, look, for you to see growth in an industry, the contribution which the banking industry has to make here is to make it easy for people to access credit, and that people should be able to raise loans and even be able to access loans even at lower interest rates than the rest of them. And monetary policy gave the CBN management a mandate to do something about it without necessarily altering the policy rate. And that has resulted, some of the action that we took, for instance, imposing the loan deposit ratio on banks, and also saying that some of those corporates and non-bank financial institutions that were operating in the open market operation window of Central Bank of Nigeria should get out of the window. We found out that has resulted in a lot of liquidity inside in the non-bank sector that has now resulted in putting the pressure on banks to now begin to seek areas where they can loan their money, particularly to the private sector of the economy. And I'm sure that you also would have seen that some banks would have called even you as an individual, as long as you have a job, saying that they want to give you consumer credit lane again. or that you want to buy certain things, they want to give you credit for it again. And these are also coming at significantly lower interest rate, because we've seen, and we have the data that shows that interest rates between June and now has dropped by at least close to between 300 to 400 basis points, which we're happy about, and we think that this trend will continue.
Okay, can you talk to us about the rates, which you have said are pretty stable? I know that only recently you had cause to appear before the Senate to say that, oh, there were no special rates being given to government. I think usually, or there are not many different interest rates. I'm looking for the right words now. Exchange rates being given to different individuals. And oftentimes 305 naira is what we hear, but we know that at the forex market we're getting it for 360, 357 thereabout. Can you tell us what causes the disparity in this exchange rate?
Okay, first, I think it's important for us to say that the central bank, as a result of the crisis we saw in 2015 and 16, sort of liberalized the foreign exchange market outside the CBN window, right? And that is what we call the investors and the exporters window. And that market currently operates at between 357, 360, 361, and 362. And that is a dominant market, right, today. What we have also done is that the truth is that there is really no 305 transaction. Most of the transactions that happen today, the 305 is like a budget rate, but the other rate that you'll be talking about is at a rate higher, closer to about 330, okay, which is the rate at which CBN sells dollars to corporates, those who are importing raw materials, those who are importing some of the items that we think we cannot produce in the country. The prices range between 330 to about 350, and of course they also come at other spot and forward rates, such that by the time you look at the implications of delivering 330 to you in 180 days or in about 210 days, the price is effectively closer to about 350 to 360, which is the ultimate price of the market. So exchange rate, really, when you talk about disparity, people talk about disparity in terms of what is the price of foreign exchange at the black market compared to the price of foreign exchange at the official market. And because I say today, you go to the BDCs, you go to the non-bank sources, you can find dollar at about 359, 360. And at the bank sources, what I call the other bank or interbank sources, you can also find foreign exchange at about between 359 and 360. So we say that these two markets are substantially converged.
What is the battle with the governors who are saying now that they want their monies to be given to them in dollars?
You see, the issue is when people say that they want their monies given to them in dollars, we all have a responsibility to make sure that institutions play their roles the way they're supposed to play them. Okay, the central bank, by the Central Bank Act, has the responsibility for managing the foreign exchange reserve and exchange rate of the country. Okay, when everybody wants to play that role, what happens is that what you are trying to run away from, which is substantially a depreciation or devaluation of your currency, you will get it. And naturally, we all know that depreciation or devaluation has its own consequences on the economy, and what we seek to pursue is a stable exchange rate that makes it easy for businesses, for everybody to plan, and not exchange that is very volatile to the extent that it creates distortion, and also to the extent that it even creates speculation for actors in the market.
You're watching Hard Copy, coming to you from our studios in Abuja. We're speaking with the Central Bank Governor, Godwin Emefiele, tonight. He takes on inflation figures released by the MBS this week, especially with regards to the closure of Nigeria's land borders.
People say that the border closure is responsible for the uptick in inflation. And I can tell you that I don't disagree with you. But the fact that we closed the border and inflation moved up just by 0.3%, yes, you will say maybe it will move up even further, right? What I'm saying is that it could have been worse if certain actions had not been taken. right? And I'll give you a few examples. Before the border closures, right, I had received telephone calls and letters from Rice Millers Association. I had received calls from Rice Farmers Association, right? Those who produce the paddy rice. They're saying they can't paddy. People produce paddy, say they couldn't sell their paddy because the millers are not buying. The millers are saying that they are not selling their rice that have been milled because of dumping and smuggling of rice into the country. Because those that have been imported, not only that they are substandard, but they are also seen to be cheap in the market. Okay, and that they were saying, CBN governor, the money that you gave to us, the loans that you granted us, that it may be difficult for us to repay this loan unless something is done. I'm saying that the inflation that we have right now has created an opportunity for many more Nigerians to go into the production of these items that are being smuggled into Nigeria. And I'm saying because of our own activities, what we have done by granting facilities through the banks, either through Anchor Borrower programs, to those smallholder farmers that are in our local communities. Is it for cassava? Is it for maize? Is it for rice? Is it for tomatoes? Do you understand? Those are the things that will improve the life of our rural community. And when we talk about jobs, that is how you create jobs for our rural community and create wealth in those rural communities.
You're not going to wade into the argument that, you know, these items were not only prohibited, if at all they were going to be imported into the country via our land borders, people should have been paying duties on those items. And so people will argue that it's the failure of institutions rather than the fact that we didn't have laws or guidelines or regulations prohibiting such items. How do you wade into that conversation?
Honestly, Mope, you see, you are very correct that you can talk about failure of institutions, and I'm happy that you've been very very smart and tactical in using institutions without mentioning institutions deliberately. But again, if institutions fail, yes, I know we policymakers must do something to address failure of institutions. But if institutions fail and it results in a situation where, right, our economic policies are being undermined, do you understand? To the extent that it's resulting in loss of jobs and our industries are dying. If there is anything, me sitting where I sit, I can do to stop this from happening, particularly smuggling and dumping, I would do it. And I'll give you an example. So when you talk about, I don't disagree with you, but let me give you an example. In 2013.
Before you add your example,
yes,
let me quickly say this, because people say that this is not a long-term solution. For how long are we going to close our borders, considering the fact that we just signed an African continental free trade agreement?
And I will talk about that as well. Yeah? What I'm saying is this: there's too many things wrong. That in 2013, Nigeria increases duty on rice, parboiled rice, right? Increased duty on parboiled rice to 70%, so that those who grow rice locally, right, the price can be competitive. What happens is that Republic of Benin goes around, reduces the duty on parboiled rice from 35 to 7. Cameroon scraps duty from 10 to 0. These two countries eat what is called white rice. They don't eat parboiled rice. If they don't eat parboiled rice, then it will mean, it stands to reason to me, that the reason they reduce or scrapped duty for the importation of parboiled rice into their country is to undermine the economic policy of Nigeria, which is aimed at making the price of locally made rice competitive compared to its imported alternatives. So, but my question therefore, so when you therefore say that in the light of these, how does it affect Africa, the AfCFTA? The AfCFTA is an arrangement that is being put in place that will guarantee free movement of persons and goods and services within the African continent. But I'm also saying the reason why even Central Bank came up initially and said we cannot be part of it is because we felt Nigeria was not prepared. What would be your advantage in an AfCFTA when you don't have jobs for your people, when all your industries are dead? In fact, the fact that we decided to go in And the fact that we are strengthening our position to ensure that we get our industries back to life. A country with a population of 200 million people, a country with the highest GDP in Africa, certainly is a market for everybody to come to. Then we must prepare ourselves to a point where we can say that we have industries, not only industries that will feed us, not only industries that will produce for Nigerians, but industry that will become competitive to the extent that we can now export, and not a situation where the reverse is the case, where what we are doing is that spending a foreign exchange, do you understand, on a reverse side, and thereby creating pressure on our exchange rates. Those are all the things that we need to take in mind. So what are we saying? We need to prepare for AfCFTA. Preparing for AfCFTA also means that we need to get our industries back alive again. Preparing for AfCFTA also means that we have to do something to make sure that we create jobs for our people. That's all we're saying. And really, the sooner we embrace these policies, making sure that we get our industries back to life again, the better for us. Because by the time AfCFTA starts, and these industries, our textile industries, our manufacturing industries, if we don't get them back to life, we will be the losers in the AfCFTA. Everything we're doing here is, how do we get our industries back to life again? How do we create jobs for our people? And whether we like it or not, there's an interrelationship between creating jobs, getting our industries back alive, which is about the economy, and security. If we don't find jobs for the young ones, if we don't create opportunities for them to do business, if we don't make it easy for them to access credit, and indeed, like you said, at low rates, factories and industries to access credit at low rates, if we don't do so, not only that we will be creating insecurity for our system, our country will continue to remain a dumping ground, and we don't need that in Nigeria.
How are you reacting to the criticism that the CBN is getting too involved in what ought to be fiscal policy?
I will explain it this way. CBN is part of Nigeria. CBN is an institution in Nigeria. By my mandate, right, like I told you earlier, I have to put in place monetary policies, in this case policies, that must translate positively on the lives of our people. And what am I saying? If, for instance, we're saying unemployment, say standard, we need to employ about 5 million people. Or let's imagine that gap is 10 million people that we need to employ. And by my own activity, I employ or I create jobs for about 3 million people, and fiscal create jobs for about 5 million people. What we're doing is that we are working hand in hand to achieve higher rate of employment in our country and reduce unemployment. That is our role. But I'm saying, when people say CBN is going out of its remit, it is an unfair comment, because our law allows us to do what we're doing. The point is to say, am I doing what is outside the law that creates Central Bank of Nigeria? My answer is no. Because I repeat, the policies that we are implementing are those that we said must translate positively on the lives of our people to create jobs. Is it Anchor Bora program that is making access to credit to our smallholder farmers in the villages? Is that going out of my area of remit?
Shouldn't that be the job of the Bank of Agriculture?
No, I'm not. The truth is this. Bank of Agriculture, nothing is stopping it. Indeed, we are working with Bank of... It's not Central Bank giving these loans directly, I want you to know. What we do is that we enable the intervention through Bank of Agriculture and also other banks and all that. In any case, when you say Bank of Agriculture is part of the banking system, not fiscal. Am I communicating? So what we're saying is this. We have a bad situation on our hand. And that bad situation is that we badly need growth. That bad situation, we badly need to create jobs for our people. That bad situation is that our industries that were once alive, that were dead, that we need to do something to bring them back to life again. That's what we're doing.
Now, I forgot to ask about stamp duties and charges on deposits above 500,000 naira. But in a response to the question sent as a text message, the CBN governor says in a message would have taken the liberty to summarize that charges on withdrawals and deposits above a certain threshold are features of the cashless policy, which is not new, but has been in place since 2012. However, the CBN says they're listening very closely to the public to ensure that customers are not shortchanged. The CBN is currently reviewing the guide to bank charges to ensure that charges are fair, commensurate with the services that financial institutions provide to their customers, and that multiple or duplicated charges are removed. And on stamp duties charged on POS, now borne by customers, the CBN says, to promote cashless and in order to encourage patronage of electronic channels, the merchant service charge was reduced to 0.5% per transaction with a cap of 1,000 naira. MSC is a fee merchants such as supermarkets, airlines, filling stations, hotels, etc. pay for the payments that customers make to them through electronic payment channels such as point of sales. Surprisingly, even after the reduction of MSC fee, some merchants have turned around to transfer the statutory 50 naira stamp duty for transactions on electronic channels to their customers, claiming that this is based on a CBN directive. This claim is totally false. Well, for me, the question for the CBN is how those misunderstanding this directive will be made to do the right thing. On this note, we say thank you for watching Hard Copy tonight. Please send us your comments and thoughts using the handles showing on your screen. I'm AfCFTA.